Welcome to this video. Today we're going to be doing a stock analysis on Carvana. Now, for those of you who doesn't know Carvana, it's a used car salesman which has been quite popular over the last few years. I'm just going to show you how insane the growth was a few years ago. As you can see here, yep, of course they had this peak back during COVID when everybody was selling their used cars and buying them. So they had a huge spike here, and then it tanked quite a bit since, all the way down here. As you can see here, it was up in 300 something dollars, and then it went down to almost 7. So it's quite a volatile stock. But then again, if you look at the earnings, it still was positive. So it's quite a volatile stock in that regard, but it has risen quite a lot recently, which is quite nice. Unfortunately, we have this, as you can see here, we have this death cross here, which came about 2 days ago. This death cross where the 50-day moving average passed below the 200-day moving average. So this means that the momentum in the stock right now is crashing a bit. Now that is interesting because if we look at the earnings report here, we can see they actually made 84% more money than expected, but they still tanked quite a bit on the day, down almost $40. This is actually quite interesting why I did that, considering that they said how much money they were going to make and they reported a lot higher. This is quite unique. You can also see just in the RSI, they moved from the upper parts to the lower parts. So yeah, quite speculative. I think it's just a big short pressure coming down here for shorters because they have seen how volatile the stock is. Also look at the last earnings report, how much it shot up. So this is quite a speculative stock. So if you have this, you should be a bit wary of these big falls and these spikes that come. But yeah, overall, I actually like this stock quite a lot. And the reason why I'm doing analysis today is because of the tariffs that Donald Trump are making, which could be quite a beneficial for Carvana. And now might ask yourself, why is that? Well, that's because new car parts are mainly produced in China, Africa, and Europe. There's not that many parts being made in the USA unless you're Ford and Tesla. So I think a lot of people are going to be buying used cars as we might see a surge in new price costs. So I think it's quite interesting at the moment. So definitely think that people will tend to go more towards Carvana. And also given this past drop, I think it's going to go down to around the last support levels we have. Let me draw this line better. This kind of support level we had here, if we make it line a bit bigger. As you can see, we also had some stabilization right back here in 2024. I think it's going to go back to here after this death cross because we can see this 50-day moving average is tumbling down with a quite sharp rate. So that means that chance it's dropping is quite big. Of course, we have this 3% increase today, but I wouldn't take a single day just to say it's not going to happen anyways. I think it's going to go down here, and when it does, if it does, I think it's going to be quite interesting to see if it can be bought at that time. Also, if look at this as the EPS here, they always surprise and quite positively. Look at this, 946%, 111%, and 84%. It's insane. Now then, but then again, you look at their money. The income is insane. They made $2.4 billion, but they actually lost money in net income. And again, here they made $3 billion, only 28 million netted. So their margins are quite low. So that is also why I think it's been performing so, how do you put this, so volatilely. But yeah, if you look at the stocks these past 2 years, it has been a pretty good stock to have. If you had it in 2023, you would net over 1,000% revenue, and in 24, 300%. So I think it's quite interesting. If we look at the technicals here, it's a neutral. Of course, because we've just had this death cross and then the RSI, it's not that great. It has been trading upwards here between the 50 and the 70, so it's quite interesting. So it has been performing quite well in that regard. And then, of course, you see the analyst ratings here. We have one strong sell and one sell, but then again, we have 10 strong buys and 8 hold. So it's quite a volatile stock because there are quite different opinions on it, but it's a very interesting stock. But if we look at the volatility on it, it has increased quite a lot because of this sharp sell-off. So I would just keep my eyes on it, and then once it tanks to around here, or if it stabilizes, I really don't see where else it's going to stabilize because the other support lines, if it were to be, we'd have to increase quite sharply again, which would be back up here at 250. But I'm not sure it's gonna do that anytime soon, just given how big of a sell-off we had right here on the earnings. So if it can stabilize up here for some time, it's definitely also going to be an interesting buy, but it's going to trade within this. I'm sure of if it falls below this, what is the next? Then we are all the way down here. What is that? 100? Yeah, 128. So yes, you can see the amount of distance between the support lines in a stock like this is quite unnerving because that just shows that it spikes and falls quite a lot. So be a bit careful with this one. But again, as I said earlier, the political environment for a stock like this is quite interesting at the moment. So definitely keep an eye on it. Just maybe do your own research, see how much price increase will be in the US. So yeah, because of course this is only in the US, so it doesn't really matter how much it increases anywhere else in the world. But very interesting stock at the moment. Of course, if you did like this video, don't forget to leave a like and subscribe. Thanks for watching.